Creating a business loan requires coordinating a few more elements than on a personal loan. Here in front of us I have a diagram of the business loan layout. You can get to this diagram from the Learning Center on moneytools.net, the Loan Manager Learning Center. You can download a copy of this and save it for yourself. The flow of the money in a business loan layout starts with the person requesting a policy loan from the insurance company. So the money comes from the insurance company in the form of a loan, goes into the money manager account. Now, the money manager account is a personal checking account, nothing special, but it's separate from that person's everyday checking account. And that way this money that is going to be tied in a way to the business is not going to be commingled with any other personal funds. This money manager account acts as a clearinghouse and helps keep the bookkeeping in order. The money then flows in a loan to the business checking account. This is a loan from the person to the business. The business makes repayments with interest back to the person, the money manager account, and then the person sends those repayments back to the insurance company, paying down the policy loan. The documents that we need to track here is, first of all, the amortization schedule between the person and the business. Interest on this schedule is a deduction for the business, and it's interest income that you need to claim on your taxes for the person. Also, between the person and the business, there needs to be a promissory note, which is the legal agreement that the business is borrowing money, just as if you would have a promissory note if you lend money to somebody else. The business needs to have minutes of the meeting where the business decided to borrow the money. This is important if you want to keep a good liability shield for your business. Otherwise, if you're ever sued and you didn't keep all the corporate formalities, then the attorneys could argue in court that this business is just really you, and they could come after you instead of just the business. And then you have the meeting notice waiver. Most companies and corporations have written into their bylaws or operating agreements that when they have a special meeting, a notice has to be issued a certain number of days before the meeting in a certain way. The waiver of notice, signed by everyone involved, eliminates the requirement to fill that notice out ahead of time. Now, on the other side, when the person goes to repay the insurance company loan, we want a schedule to track the interest on the policy loan as well, because when a person borrows personally for a business purpose, the interest on that loan can become an investment interest expense, which is tax deductible on a personal return. We want to keep this second schedule to track the interest that the insurance company is charging on the policy loan. So 2 schedules, amortizations, a promissory note, minutes, and a waiver of notice of special meeting. Now let's go and set these up in the Loan Manager. Inside the Loan Manager, the first thing we'll do is set up the contacts for lender, borrower, and the insurance company. And go up to Contacts, click the Create drop-down, enter the person, Jeffrey Smith, and we could put a description in here like the mailing address where the business will send repayments. We'll click Save. Add a new contact. This one will be for the business, example, LLC. And then a new contact for the insurance company. And I might want to include the mailing address for policy loan repayments here. All right, now our contacts are set up and we are ready to set up the schedules. So we go to Schedule, Create. The first schedule will set up between the person and the business, between Jeffrey Smith and Example LLC. We'll put in the name here. And I always like to add that this is the leg between the personal and business. And for the description here, we'll put in that it's an equipment purchase. And then we can select the lender, which will be Jeffrey Smith, and the borrower, which will be Example LLC. Right here we put in the interest rate, which needs to be a reasonable market interest rate, not anything outrageous. We'll use 8% for this example. And the compounding period we can leave set to monthly. We'll save this. Now we're inside the schedule. To look at more detail creating a schedule and what the cash flow rows mean, check out the video on creating a schedule. We're going to go through this a little bit faster now for the business loan. First of all, we have the loan cash flow. The date of the loan is September 4th, 2016. The amount of the loan we'll put in is $100,000. And there's just one loan. We didn't make more than one loan. Now we have the payment cash flow in the next line. Payments are starting 1 month after the loan. And the amount, we don't know what we want the amount of this to be. We'll let the loan manager calculate it. Quantity is set to 36. That's 3 years by default. 36 monthly payments. We'll go ahead and leave that the same. You can change it if you want to use a longer term for a lower payment amount, or a shorter term with a higher payment amount, but the money is coming back faster. So we'll click Calculate now. The loan manager does the calculations. It brings back the results and splits out the last payment, so that's a little bit less because we didn't need the full monthly payment to finish paying off the loan. Now, here's where you need to make some notes. You need to make a note of the regular monthly payment, $3,133.64. We're going to have 35 of those payments, and they start on October 4th, 2016. With a final payment of $3,133.52 on 9/4/19. You're going to need this information for the second schedule and also on the promissory notes. That's why we write it down and save it for later. Now we'll click the Amortize button, and that provides the amortization schedule. Everything looks good here. You could print a copy or save a copy as a PDF if you want to. And now we're ready to create the second schedule. This schedule is between the person and the insurance company, between Jeffrey Smith and the insurance company. We go to Schedules, we click Create. There's going to be Business Loan 1. We use the same name, except we add on the end that this is insurance company to personal. Description of the loan, I'm just going to put in here personal loan for business purposes. The lender, of course, is the insurance company, and the borrower is Jeffrey Smith. The interest rate is going to be the policy loan interest rate. One of the companies we're working with right now is charging 5%. I'm going to put in 5%. And here, this is important. The insurance company compounds interest annually, not monthly. So we change that to annual and click Save. The loan amount we want to be exactly the same as the loan to the business, $100,000. And the payment amount, we're going to look at our notes now. The payment amount was $3,133.64. We want the payment amount to be the same on both sides of this loan. The reason why is because when the business makes a payment back to Jeffrey Smith, even if Jeffrey doesn't send it all the way back to the insurance company right away, he needs to stop deducting the interest because that money is no longer being used for a business purpose anymore. So we'll input the amount of the initial payment, but since we used a different interest rate and a different compounding period, this side of the loan is going to be paid off sooner than the leg between the business and Jeffrey Smith. So I don't know how many payments it's going to take to pay this side of the loan off. We're going to leave that quantity field blank and let the loan manager figure it out. Now we hit the Calculate. The loan manager brings back a payment for the last payment amount that's a little bit higher than the normal monthly payment. Well, I'd rather make one more monthly payment and have a last payment that's a little bit lower. So all we have to do is come in here to the quantity for the previous line, change it to 34, so we make one more of those payments. Then I'm going to change the date for the last payment out by 1 month because we just added another month to the row above. And then I'll let the loan manager recalculate this last payment. Just hit the Calculate button. And now it comes back at $800.94 for the last payment. That works great. And all I really need on this schedule anyway is the interest totals for the end of the year. So I click Amortize. And here we are. Our schedule shows all the information for this side of the loan and shows that we pay it off a little bit sooner. And the interest totals on this side of the amortization are what we get to deduct every year, what Jeffrey gets to deduct every year, because he borrowed personally for a business purpose. As long as he has his tracing and all the other documentation in order, he can do that. Just get those totals to the CPA or accountant and make sure they know what to do with them. Now heading back up to the top, we're ready to set up the documents. So click on the Documents tab to go to the Documents Template Library. At the very top of the page, you'll see a little bit of information on how to use the automated workflow. And then you know that we need the promissory note. Here's the promissory note right here. But we also need the minutes and the waiver of notice of special meeting. Of course, you can download those here on the page as well. But when we're doing a business loan, it's easier to use the combo document because all three are included in the same document. So I'm going to select the download the LLC loan combo. If your corporation is an INC or a different type of corporation, you might want to download the corporate loan combo. Just a little bit different wording that you can start from. Once the template is downloaded, I go and find it either on my desktop or in Downloads and double click to open it. When you open the document, there will be a warning to enable macros or disable them. You'll want to enable them if you want to use the automated workflow. That's necessary in order for them to run. If you're using a Windows computer, this warning may be along the top of the control ribbon when you open Microsoft Word in a yellow bar. So we're going to enable macros. I'll go into full screen here with Microsoft Word. And to start the autofill process, the keyboard shortcut is Shift-H on a Mac or Control-H on a Windows computer. You will need a Windows or a Mac in order to use the automated document workflow. If you're using an iPad with Microsoft Word, you'll be able to access the document, but you won't be able to use the automated workflow. So you'll accept the warning here that this is not a certified legal document. Then the automated workflow kicks in. So it highlights each field, each variable, and allows you to enter the amount. So in our case, we used $100,000. So we enter the loan amount there, we click OK, it takes us to the loan date. The loan date was 9/4/2016. We click OK. Now it takes us to the next step, enter the borrower name and the lender name. The lender address, this is where payments would be mailed. We enter that, click OK, it inputs that. Now it wants the written amount, example, $10,000.00. So we need to write out $100,000.00. There we are. Enter the rate. This is the interest rate on the loan, 8%. And the repayment description. This is where our notes come in handy again. And for a sample repayment description, in the Document Template Library, at the very end under Extras, you can download the Extras document and there's examples of how you can word this repayment description. I'm going to word mine this way. Alright, that looks good to me. I click OK. You can see the full text that I entered on that bold line right there for the repayment description. The late fee percentage is next. I usually use something like 2%, or the late fee dollar amount. To figure that, I would take roughly 2% of $3,000, which is about $60 in this case. And the grace period, I generally use 30 days. And you can see that I don't need to enter the days because the grace period is highlighted here, and you see that the days word is already in the template. The payment frequency, that's monthly. The default increase rate, if the borrower goes default, you can read that paragraph, see how this needs to fit in. I'm going to use 2% here as well. The lender signature line. Well, this is going to be the signature line for Jeffrey Smith, so we put in Jeffrey Smith's name. And the borrower signature line, this is, for example, LLC. And then we need to include the officer or the manager or whoever's going to be signing this document. All right, now for the company name. Example, LLC. And any time where the company name now appears through the document is going to be replaced with example, LLC. The meeting location, I'm going to put in at the office of the company. The meeting date, let's have that meeting date as today. The manager's present. Let's say Jeffrey Smith is the only manager of this company. The meeting chairman would be Jeffrey Smith. And the meeting chairman, his title within the company would be a manager. And the resolution. This is where we need to document why is the business borrowing this money. You can find sample minute descriptions for these resolutions in the extras document that also contains the repayment description for the promissory note. Also in that extras document is a notary public sample text that you can add to the promissory note or other documents if they need to be notarized. So the resolution here, we're going to say resolved the company click OK there, and now you can see in the bold lines how those resolutions inserted into the minutes here. Everything looks good here. Now the minutes want us to put in the state of incorporation. So we're going to put in the state of Nevada and the alert, the meeting date and time. This is the date and time of the meeting for the waiver of notice of special meeting. All right, and the waiver date. And the manager one, Jeffrey Smith. And he is a manager. And we don't have a manager 2. We're at the end of the documents now, so I'm just going to cancel the auto workflow, and I'm going to take out the line, the signature line for manager number 2. And then we just scroll through the document and make sure everything looks correct. And if everything's good to go and I don't want to make any changes to this, then I can come up here and click Save or print this document out for signatures, and everything is good to go on this business loan.